Hey you guys, welcome back to the channel. My name is Brad. This is the SFYX Financial Toolbox. I had a viewer recently ask me to talk about the SFY ETF, and it's a SoFi managed ETF. And then he asked me just the other day, and I want to thank Luke for asking the question. He wanted me to do a review on what I thought of SFYX. That's what we're going to do here next. You guys, the SFYX is the SoFi Next 500 ETF. So let's get into what that means exactly, because I wasn't sure. All right, so the fund summary. Now, you guys, I'm on the SoFi.com page here. So, fund summary. Diversify your investments with the SoFi Next 500 ETF. Fee-free for at least the first year. The SoFi Next 500 ETF is composed of 500 mid-cap U.S. companies. SoFi weights each company based on 3 growth signals, not just market capitalization as many traditional ETFs do. The SoFi Next 500 ETF seeks to track the performance before fees and expenses of the sole active SoFi US Next 500 Growth Index. So you guys, this is a index that SoFi has created. So it's a proprietary index. And let's take a look at some of the breakdowns here. And this is as of September 2nd. So I'm recording this at the beginning of September 2021. Currently, it's trading for about just a little under $15 per share. Looks like it's at a 0.35% 30-day spread. Okay, so let's take a look. This fund's been around since April of 2019. So it's been around for about 2.5 years now, not quite 2.5 years. It's got a gross expense ratio of 0.19%. So you guys, it's under my cap of 0.2 for a ETF that's reasonably priced. But as you said, the net expense ratio is free because for at least the first year, they're not charging you for that. So let's get into how we've done year to date. Year to date, 15.89%. Pretty darn good. Now, if we go back to the 1 year, it's over 50.5%, you guys, for 1 year. That's pretty crazy. Since inception, almost 46%. Now, remember, we've been on a big bull market through a lot of that, so take that with a grain of salt. Let's take a look at the fact sheet here. So let's find out a little bit more about what this makes tick. This is on the New York Stock Exchange. As I said, has a total of 498 holdings. And what this is, you guys, is you have your S&P 500 companies, which are the 500 largest companies by market cap in the U.S. This is the next 500. So think 501 through 1,000 for size. So they're a little bit smaller companies, which means they could be companies that are growing. And this is sort of a growth-focused ETF. Low price per share. Invest with small amounts of money in an ETF with one of the lowest prices per share on the market. You guys, and I know through SoFi you can do fractional shares. I'm sure that you can buy this ETF on all of your major ETF platforms. If you work with M1 Finance, for example, any of those, I'm sure you would be able to buy this as well. So let's take a look at the diversification. Help manage risk by investing in the next 500 largest U.S. companies. So it's a good way to get, let's say you have another S&P 500 ETF, you get the big 500. Now you're taking the next 500. So I think that's actually kind of a good idea for somebody who wants to have exposure to more than just the largest companies. Remember, these are companies that have room to grow up into S&P 500 companies. And as I said, it is a growth-focused ETF. It says SFYX uses a composite growth score to adjust companies' weightings in the ETF. The score takes into account sales growth, revenue growth, and forward-looking revenue estimates. So it's basically taking a look at each company and going, hey, depending on how well this company is doing, we're going to put a bigger share of the pie into that company. SoFi ETFs target a higher risk return profile suitable for long-term investors who are both beginning their investment journeys as well as on their way. You guys, you know my theory on long-term investing. I don't buy ETFs and trade them. I buy them and hold them. So I think if somebody is looking to have an ETF to get some mid-cap exposure, I think it's a good option. It's low cost. It's free for the first year, so you can't really beat that, right? And I think it is a good option. So if we take a look at the top 10 holdings, we see that you've got small companies. Some of these I've heard of, some of them I haven't. Novavax, I would sure that is in the healthcare industry. Datadog Incorporated, probably technology. Upstart Holdings, Chegg, Nuance Communications, Horizon Therapeutics, Cloudflare, PTC, Medical Properties Trust, and AdvantCore. Now, I only heard a couple of those things, but if we look at the way this sectors are allocated, so for basic materials, it's 3.2%. Communications is a little under 4%. Consumer cyclicals about 13%. Consumer non-cyclical looks to be the biggest section, a little over 24%. Energy is about 3%. Financials, pretty big at about 20%. Industrials, 14.5%. Technology, a little over 15.5%. And utilities are a small part because most utilities are bigger at 2.6%. So you guys, I think this is a good combination of allocations. I think it's good in that it's a very low cost fund, which I like. You know, fees and holding long term are really the only two things you can control. The reason I like to buy and hold is because if you're trading, you never know if you're trading in or out at the wrong time. You may think it's a high and you trade out, you go to cash and you're waiting for it to drop, but it doesn't. When then you buy back in, it's high. You guys, market timing doesn't work. It doesn't work for professionals. It's really hard to do on your own. So I think in answer to Luke's question, and again, Luke, thank you for asking about this. I think this is a good ETF for somebody who has an S&P 500 ETF and they want some exposure to mid caps. Now, I'm not sure I would make this a major part of my holdings because remember, mid caps make up about 20% of the U.S. market, but certainly is something I think that people should think about in getting a full market coverage. If you're already using S&P 500, I think this is a good extended market index for you to use to kind of fill out what you have. What do you guys think? Do you guys have independent ETFs that you use for your mid caps? If you do me a favor, put them in the comments. All right, you guys, I hope you got something out of this. If you did, do me a favor, drop me that like. It really helps get the video out to more people. All right, we'll see you.